Hi, this is Doug English with Act Advisors with your May 2024 update. Well, unfortunately, April was a down month for everything. We saw the bond market decrease about 2.5% on increasing fears that the Fed would not cut rates as early as the market would like. The stock market also decreased on the same fears, about 4% for the month, and that permeated across the small caps, the large caps, the Dow, the S&P, all the way around. In fact, small caps lost about 7% for the month of April alone. You'll remember in my video from last month that we did expect that we might have a pullback. This is a perfectly normal stock market behavior, sort of rhymes like last year did, where the stock market wanted to see the Fed stop increasing rates and then say that they're going to decrease them. We had negative returns in the bond market all year until November, when we saw that beautiful surge for November and December, and you got all your returns in that period of time. Well, that may occur again this year, as the Fed, of course, has not yet cut, and it seems like the time when they're going to cut keeps pushing back, and the market is very much concerned about that. So in your accounts, the more conservative investors benefited from the pullback by being more conservative. What I mean by benefited in this case is your accounts went down less, something between 2 and 3%. The balanced and more aggressive accounts went down something in the 4% range for the month of April. So looking forward, we have had a lot of activity in the portfolio during the month of April. So our investment committee meets every week, and we made the determination about mid-month to make a change from the PIMCO Stocks Plus Fund, which is a fund that was investing in stocks and longer-term bonds, and we moved that into an energy ETF. And the thinking behind that strategy is trying to have something in the portfolio that is not directly affected by interest rates. Because right now, the way the market is behaving is if the Fed is getting data that's saying they're not going to cut for longer, both stocks and bonds are going down, not providing you any insulation in your portfolio. So the energy ETF was added about mid-month. It has provided some nice dampening of volatility so far, and we'll continue to keep track on that as the year progresses. The stock and bond rotations also have changes. In the stock rotation, we're selling the SPY position and moving into mid caps. In the bond rotation, 2/3 of the rotation is moving into the cash-like instrument JPST. So we're essentially exiting the bond market in those positions. And 1/3 of the bond rotation is staying in the shortest a bond instrument, the senior loan floating rate fund. So that will really decrease the interest rate sensitivity of the bond rotation going into the month of May. So as always, we are here at Act Advisors to help you. We want to hear about any concerns you have. Again, if you have any cash flows moving around, let's talk about the timing on those. We do think the situation is going to work out. The Fed will get to where it is cutting rates. It just may take longer. So when the Fed increased rates all those times last year, it takes a long time for that to cycle through the economy and to have those effects actually show up. I think that's what we're waiting for right now. Eventually it will get there. Might rhyme like last year, where it's late in the year before we see the reward for the financial markets. As always, we are here to serve you. If you have questions, please reach out to us right away. And thank you very much for your business.